Hey you guys, I know it's been a while, but I am back with one special video for you, so get ready. Hey you guys, you know the culture here is news, the good side of it anyway, and I know it's been a while since I've done a video, but it's kind of because I have been looking to revamp the channel a little bit. I want to do a lot more face-to-face reveal videos, and I'm getting my camera and all that type of stuff ready for that, so you guys will be seeing me soon. But I wanted to do a special video particularly about this because my folks have been tugging at me for a while to do a video about this because it is a bull market, and I've been avoiding it because although my degree is in finance, I'm not a financial advisor, and I really don't want to be seen as such. Plus, I work in real estate, and that's my business. That's my passion. So, but I wanted to do a video about this because the Dow plunged 600 points yesterday, which is about 2.41%, I believe, and the S&P 500 fell about 3.18%, which is more than 80 points, and the Nasdaq fell about 4.4, more than 300 points down. And this kind of sent the internet into a panic. Not necessarily everyone. Us long-term investors understand how things work, but I would say these millennials and a lot of new investors definitely were like scrambling yesterday. So I definitely wanted to do a video. This is not going to be a long video, but just to give you guys an idea of how to look at investing the proper way. That way, every time things like this happen, you don't necessarily think to yourself, the world is ending. When it comes to investing, it's really important for you to first decide what your goals are, how much time you have, as well as evaluating your feelings about risk and what it means to take risk. Because often when my very own friends or people just, ask me for advice, about the stock market and, investing and things like that, I always say to them, are you looking to invest short term or are you looking to invest long term? Because I'm going to tell you now, if your sole interest in this is to make some short term, quick come up cash, then the stock market isn't for you. It's just not in my opinion, because of how the market itself works and how things fluctuate. Now, if you're looking to invest long term to build some capital for years down the line when you retire and kids go off to college and so on and so forth, then okay, maybe you could look into the stock market. Because here's the thing about investing. There are only one of two things that can and will happen. Your money is either going to appreciate in value or it will depreciate, and you could end up losing half of your earnings simply because, it was a bad year in the market, a bad month, or whatever. The difference, though, is that with long-term investing, you can always sell and get a decent return for your money. Whereas with short-term investing, you really wouldn't have a chance to recover from a negative short-term performance. You're not going to really get much cash back. So it's just something to think about when it comes to investing, and definitely something to evaluate. Now, if you are looking for some short-term quick cash, which would be considered cash you're looking to mature really quickly in a short-term period of time, aka liquid, and you just want to fiddle around on the market with it, my personal recommendation, actually I shouldn't be recommending this, but I'm just going to say one example of short-term investing would be like options trading, which is vastly different from the stock market and investing in the stock market. It's also something I'm not very experienced in, so I'm not going to spend a lot of time discussing that because it's not my thing personally. But it's just an example. Another good example of short-term investing would be like money market accounts, deposit certificates, treasury bills. And you can always do what other people do. If you have money to waste and you're just looking for a quick come up, you can go play the lottery. Mega Millions and Powerball are always looking for someone to invest in them. If you're trying to make some quick cash, and everyone bets on it for whatever reason. So those would be considered short-term investments. However, if you're looking to start an actual portfolio where you are looking for your money to grow over a long-term period of time methodically, then it's definitely best to look into long-term investing, and you can go with perhaps some mutual funds. Of course, there's the stock market, and my personal favorite, real estate. Those are my personal 3 favorites. Others may feel differently, but I feel that if you are looking to really build a portfolio that will be worth something in 15 to 25 years, then it's really best to look to spread your investment dollars across several asset classes. And when you do that, it can have a tremendous influence over your long-term return. In other words, it's just a form of diversifying. And diversifying your portfolio is so important. Now, to help you to decide how to diversify and set up your portfolio, I personally encourage you to seek assistance from a personal financial advisor. You can also get started by reading some books from the very best. I have provided links in the description box below from a few authors of books that I have read personally myself, and I feel that they are the best at helping people, particularly beginners, to understand how all of this works. Because, both reading the information and researching the information properly, as well as discussing your personal financial situation with a financial advisor, it will all help you with determining your risk capacity and how much you can actually afford to take on. Now, if your goal is retirement in 20 to 25 years, go with long-term investing. You won't regret it. With long-term, your investment account has time to recover from setbacks such as what happened yesterday, whereas with short-term, a loss could very well jeopardize your ability to pay rent next month, and you don't want that. In fact, nobody does. One of the things I do want to stress in this video about investing is that I want you to pay attention to why diversification is so important, because one of the key concepts with diversification of your portfolio is correlation. Investments that are perfectly correlated often rise and fall at exactly the same time. So that means if all of your investments are rising and falling at the same time, depending on what's going on in the market, you're going to experience a lot of fluctuation in the value of your investments, but it's not going to be deeply impacted to the point where everything is just performing poorly. And the end result for you is less volatility in your portfolio, and it's not going to, basically, the diversification influences the level of risk and return by degrees. So asset allocation and correlation is very important, although neither one necessarily ensures a total profit, but it doesn't guarantee a complete loss either. It kind of protects you a bit. So just think about that when it comes to diversifying your portfolio. It's so important. With the Dow and the Nasdaq falling yesterday, it did erase the majority of the gains for the year. And it looks like Nasdaq also entered into correction territory. So, it's kind of a bit of a fix ahead across the market. But this was going to happen because the numbers have been inconsistent for the last few weeks now, if anyone's been paying attention. And it's been that way due to rising interest rates and what's going on in China's market right now, which has also slowed a great deal, as well as trade tensions with this Donald Trump thing. And we're also in a midterm election season as well. I know we just wrapped the end of third quarter, and those earning numbers are coming out. They're all being reported. They've been being reported, I think, since Monday. So a lot of things are being sold off. But here's the thing. The market has been showing bright spots today. So, less than 24 hours ago, it was something else. And this is how it goes, gang. We watched the first half of the year grow at the strongest pace it's been in nearly a decade, which created this bull market we're in now. And it's actually the longest in history. Many are predicting, though, that a recession is around the corner because it's been a long time since we've had one. And if you're wondering if we are in store for that next, I don't know. I don't want to guarantee anything. But what I will say is that one of the things we must understand about the stock market and investing in the stock market is that the stock market is a measure of how well companies and corporations are doing, not necessarily the economy in its entirety. It definitely plays a part, but it isn't the be all to end all. And if you still feel like you're in a panic over this, my personal suggestion is for you to just consolidate and revisit your portfolio to rebalance everything, perhaps. But unless you're planning to retire within the next 5 to 7 years, this is really nothing to panic about. It's easy to make money during a long bull run, but all bull runs end as interest rates goes up and the market resets itself. So what I'll say is that during times like this is where the big money is being made by people who understand long-term investing rather. They're kind of grandfathered in and they understand that this is how the game works, and it just happens. So I hope you enjoyed this video. I couldn't really give you a lot. I'm definitely not going to give out who and where and what you should invest in. Absolutely not. I think I did kind of dip my toe into it a little bit, but I didn't give you, everything. So I hope you walked away from this video with something. Happy investing, good people, and good luck in the next quarter. I'll see you next report.